Thank you, Bobby, and thank you to the Kraft family for letting us be here and help moderate this panel. We have a booth downstairs for anyone who wants to know more about Precious Metals Summit. But we're here today to talk about mining, metals and mining in 2023, and we have some of today's top investors and investment consultants in the industry, which will hopefully, over the next 30 minutes, we can make sense of what's going on. So we have Dr. Nicole Adshead-Bell from Cupel Advisory, and then we have Mr. Brent Cook of Exploration Insights newsletter. So let's get started. We're now at $2,000 gold price, near all-time high, $25 silver, 10-year high. Where do we stand on metals pricing? Have we hit the top? What do the next 5 years look like? Dr. Nikki, do you want to start off?
Firstly, you need to stop calling me doctor. It's Nikki. Although occasionally on a plane I use it to get upgraded and it's never worked. So just saying that. I can help with rocks, no medical issues. We're obviously in mining, so we're predisposed to be perpetually positive. It's the curse of being a geologist in mining, so we'll alleviate the points we make with that. Look, I feel very bullish about the sector. There's an incredible opportunity. You've got gold price hovering around all-time highs, but equities haven't yet begun to react to that, and I think partly that's because there's a lack of belief, maybe in the sustainability of these prices. We live in a world of uncertainty, but gold and its precious metals, cousins like silver, which is really gold on steroids, tends to perform well in times of uncertainty. And so I always am exposed to gold. I'm a perpetual gold bull, but I am also focused on, when I make an investment, as making a choice when to sell. So maybe something that I would like to touch on, because I think the thesis is absolutely extraordinary and there has not been a market reaction to it, is it's really on copper. We live in this incredible time with copper, and everybody's aware of it. It's not a secret. Inventories, global inventories at all-time lows. We have very few new copper supply coming on. Copper is the baseline commodity that is critical for functioning of humanity. If you look around this room, lights, electricity, everything almost that we can touch and hopefully not smell is related to copper. And so we have this great global dynamic, lack of supply coming on, stable and possibly a very, very big jump in demand as it relates to net zero. And you may or may not agree with net zero politically. We don't need to talk about that. But what net zero brings to the table is this incredible exogenous demand layer. And so if you've got supply-side constraints, mining uniquely, there's an inelastic response to demand pressures. And so when prices go up, you cannot bring a mine on like that. In fact, average timelines from discovery to production are now hovering around plus 15 years. And so, and we'll touch on this as we continue, I think we're in a great time commodity-wise in terms of lack of investment in a plethora of commodities. We have got demand-side pressures with no supply to fill those. And so that's a perfect price environment. And if you look at lithium, I don't know if anyone in this sector has, but lithium price, I think, is as perfect. What's happened in the lithium sector is a perfect snapshot of what could happen with other commodities, with lithium price escalating 18 times in 2 years, and equities performing incredibly well in that price environment. And it didn't matter what you were or what you had, as long as you have lithium in your name, you're probably up plus 10 times over the last 2 years.
Thank you, Nikki. So Brent, we here at Planet MicroCap, we've got a selection of names that are on the earlier side. How would you tell investors to look at earlier exploration stories? What are the risks? What should they be looking for? What are the strengths? If you want, just wouldn't mind.
I think. Backing up what Nikki said, she hit the nail on the head as to where we're sort of headed and the obstacles we face in terms of supplying the world with the metals that we're going to be needing. I mean, just to bring it home, probably most of you have been to Salt Lake City or flown over and seen that big copper mine, the Bingham copper mine. We're burning through one of those a year. So effectively, we've got to find one new Bingham Canyon and put it in production every year to stay even. Ditto for gold. The whole Carlin Trend, we produced about 100 million ounces on there. And they've got, where am I at now? They've produced 100 million ounces, and that's how much is being produced annually, globally, by the industry. So again, we've got to replace one Carlin Trend per year. So bringing that down to what you asked about, which was looking at these small junior mining companies, in my view, it's key to understand what a company is looking for. And that comes down to management. The management has to know what they're doing, have experience in terms of the type of deposit they're looking at, and the financial wherewithal to continually fund exploration, because it's always money out, money out. So the company, I think probably the biggest negative I run into when I go look at projects on the ground, or even looking through a flip sheet, and you might back this up, but a company needs to understand what it is they're looking for, what the parameters are in terms of bringing it forward, what the likely economics are behind it, and in the end, is what they're looking for really worth the effort that it's going to cost to put into it? In effect, are they on the road to discover a property or type of deposit that a major mining company is going to want to buy from them? And if they can't answer that question, it's probably not worth putting money into that company. So it's those three things. Management know what they're doing, they know how to raise the money, and is the property got the real potential to make a significant investment by a major mining company in terms of taking it production?
Yeah, I'd agree with Brent on that. When I look at investments, people are absolutely the most important ingredient. A mediocre management team can destroy value in a great project, and a great management team can extract value in a mediocre project. But having said that, the geological gods are sometimes working their magic in our sector, and you can have complete muppets stumble across a great discovery, and you can have people who are doing a very good job. They're executing well, they have a plan, they've got the right geological model, but they don't find anything. And so to Brent's point, I think when you're making an investment in something, they need to know what they're doing. If you ask them a question, what is your end goal here, and they can't explain that to you succinctly, run away screaming and don't go back. So you really need to understand what they are and what they're telling, not just you, the rest of the market. And you also need to sit back and go, look, where are we within the cycle? Because ultimately, if you're in a cycle where that commodity price is trending down, and us who've been around for quite a long time, plus 25 years, when the price is going down, it's a horrible time to be in the sector. Nobody wants to be exposed. Having said that, it's often a great time to be buying if you haven't lost your shirt on the way down. So standing back, and there's a company that does this incredibly well in Australia, and I've stolen their idea, so it's a compliment to them. Line Mining Selection, they have a clock that they call the mining clock, and in our sector, and I think in all sectors, we are perpetually destined to have the same behaviour, to repeat the same cycles over and over again. And if you acknowledge that as an investor about yourself and corporations, that they tend to behave certain ways depending where you are in the cycle, you can make a lot of money out of that. You just have to be able to separate your emotions. It's a very difficult thing to do, and go, okay, certain types of behaviour that occur that are indicative of a bull market, and we're maybe seeing, or topping out on a bull market, and we're maybe seeing some of those signs in the lithium sector, for example, and those other signs that are typical of a bear market, and it becomes a very, very interesting time to invest. And personally, I find it much, much easier to make investments when everybody is running, because to some degree your downside is somewhat limited.
That's a good point. I think one other thing that I always look at, and I think it's worth knowing, is an intelligent management group knows when to walk. Most of these projects, it's exploration. Gold doesn't sell for $2,000 an ounce because it's easy to find. So we know most of these projects are going to fail. My job is to identify the fatal flaw ahead of the crowd and get out of a stock. And I think that's what a company should be doing too, is if this isn't working, stop spending money on it regardless of what you told everybody it was supposed to be and move on. I've made probably really good money on companies that appeared to be doing well, and then something goes wrong, like the metallurgy's wrong, they can't recover their gold, or the politics gets bad, or there's a local strike of some sort. Just recognizing those things ahead of the crowd, you can make good money on the way up without actually making an economic discovery. And I think that's a real advantage to this sector, really.
I agree. You just have to be able to sell.
So here we are in what could be considered a rising price environment. Maybe if you could speak to, each of you could speak to, what have you seen recently companies are doing that are value creative in a rising price environment? Is it more on the financing side? Is it more on the exploration side? Is it what?
For me, I think a lot of junior management teams don't necessarily have capital markets expertise. And I think it's a skill that's not appreciated enough, because ultimately how you structure and finance your business and knowing when to finance, so when the ducks are quacking, raise money, don't just sit there and go, oh, I'm so cheap, I should be a lot higher, I'm going to raise money at a higher price. And again, as an investor, that's the kind of qualities that I look for. And I think as I look around, I don't think that our sector is behaving at all like we're in a bull market, except for lithium. And everybody's jealous of lithium right now. So you see all the ambulance chaser junior companies changing from gold or copper or whatever the case may be, and suddenly inserting lithium in their name. And ironically, that can have a positive impact, because in our sector, it's a technical sector, it's complex. 99.9% of the investing community is not technical. And so sometimes the challenge that Brent and I might have as technical people is we can look at something and go, that's absolute crap, it's never going to work. But they might be very good at marketing, they might have the love of a certain crowd of mining influencers, and the stock can do very, very well. And so sometimes there can be a visceral difference between a good stock and a bad stock. But if I sit back and look at where we are in the cycle, I don't think, other than lithium, I think we're at the beginning showing the green sheets of a very, very bullish trend. And for me, if we look at copper, for instance, and some of the diversified, normally what gives you a sense that things are moving in a positive direction is M&A. And what we're seeing now is low-risk M&A, and that is like combining with like, producers combining with producers. Some of that's just to get bigger. We live in a world now with the ETF, the proliferation of ETFs, that size matters. Sorry guys, turns out it does. So they're getting bigger, then they can attract more ETF buying, and obviously larger and larger and larger funds, because the mining industry holistically is very small, for example, compared to the tech industry. And so we're seeing these shoots that majors, and there's an awful lot of groupthink in our sector. And when one company does something, and I'm not exaggerating, I would say 50% at least of boards go, they did that, I think we should do that too. So you tend to see patterns of behaviour. And so this low risk, they've got now enough confidence in their business to start doing low risk M&A. That's a great sign. We have seen, I would put it in the higher risk M&A category. It's still producer with producer, but a Canadian company called Hudbay, it's a diversified metals producer, has announced its intent to acquire a copper company, a producing company called Copper Mountain. It is a producer, yes, but it's a very, very high cost producer. So if you are acquiring that company, you are making a very, very big call on the copper price. And the great thing about our sector is, in a bull market, you want to own the crap, because that does the best. It's got the highest beta, the highest leverage to the underlying commodity price. But you also want to be, sorry, I'm Australian, I do apologise in advance for swearing. I will ensure that you might have to beep out those words, Lily. But what that is a very, very positive sign, because what will happen is you normally start to see more and more M&A in the low risk producing side, and then it trickles down into the juniors. And when you start seeing a flurry of M&A activity and high risk M&A on early stage companies, for me that's actually normally a time when you should be exiting, and we are nowhere near that phase right now. We are in the early, companies are starting to realise that, or taking a position on the underlying commodity price. I mean, I think they're all a little bit stupid, because if I was a large company right now, I'd be buying every single development company out there. Their investors are fatigued. If you came and offered them above precedent average transaction premium, their management teams and boards would have to take it to their own investors, and they'd probably hit the bid. And so if you are mopping up all the R&D of your business, all of the future production, you control price. But unfortunately, well, fortunately for us, I think a lot of management teams and boards aren't visionary in our sector. They tend to be reactive, and understanding that and acknowledging that, that means that there's some really interesting ways that we can play our sector. That was a long-winded way of saying that I think we're at the early stages of the bull market.
Yeah, thanks, Nikki. And Brent?
I'll touch on one topic. She said you can buy the crap because it has the leverage. There's really kind of two ways, very generally, that I look at it, and that is certainly one way to do it. It's just buy the companies with lots of gold. It's totally economic and spends a lot of money on promotion. There are those companies and they do well, but their projects never go into production. So you can buy that based on sell it or great or fool, I guess. The other way, and this is being technical and geologist in that, what I prefer to do is I want to sell to someone smarter than me, that being a major mining company. So I miss a lot of those crap, and but do manage to find real companies, real projects that get bought out. And so that to me is the two ways to play this game.
I don't think you should be hard on yourself, Brent. I don't think major mining companies are smarter than you. So there is that.
Well, thank you.
And Nikki, before we go on, you mentioned Copper Mountain. Are you a holder of Copper Mountain?
No, I'm not a shareholder of Copper Mountain.
Okay.
Sorry, I should have said.
So M&A, I think, is a very interesting topic. And from your perspective, put your producer hat on, your acquirer hat on. What are the big producers looking for when they're seeking an M&A candidate right now?
I think what happened last cycle, and those of you that had the luxury of not to wear it all the way down, is every large company, particularly in the gold space, except for probably Randgold, made a mistake in the M&A. They overpaid for assets that did not perform as expected, and they all lost their jobs. And so that's very, very fresh in current CEOs' minds. So they're very, very conservative, circling back to the M&A. So everybody's looking for this perfect unicorn that in our sector doesn't exist. Low cost, in production, willing to sell. Those three things. M&A is really, really, really difficult, and it's normally because there's egos involved, and that's management teams where it's normally the useless CEO that doesn't want to lose their job. And also, as it turns out, lots of boards can be populated by directors that also don't want to lose their roles. And so I think we're still focused in that very low-risk early stage of the sector. The classic psychology that played out in the last bull market, we're seeing that exact same psychology play out, I think, today.
Brent?
I agree.
Okay, well, enough from me. I'd like to save some time for some questions from the audience.
What I want to do is I want to level the playing field and realize that this is a micro-cap conference with deep dive investors that are value investors, and I want to somehow interpolate what you guys are talking about with an audience that's not necessarily precious metals oriented. And I want to also figure in, how do ETFs and how do royalty, make it simple, make it, like suppose I have an, extensive, portfolio, and I don't have biotech because they don't have revenues and earnings. And I don't have exploration companies for the same reason, not putting 2 and 2 together makes 5. But what is it that you can address to this audience in particular that gives them an ability to potentially own something that has extensive information about it, that gives them some protection from going and buying some wild-ass listed, exploration company that's being touted on every, tout sheet there is? I mean, that's my question.
Yeah, I mean, the challenge that we all face, actually, it's a sector that's over inundated with companies, plus 2,500 listed mining companies globally, and the majority of those are really listed in Canada, and many of those Canadians have OTC listings, so you can trade them as Americans. The easiest way is ETFs. Almost anything that you can think of right now, there's an ETF around it. Gold ETFs, gold junior ETFs, ETFs that have got 2 times exposure to gold equities. There's copper ETFs, and so if you want to take that approach, there's plenty of those. Just type in a Google search, they'll come up. Royalty companies you mentioned. Royalty companies are those companies that are exposed. It's considered to be low risk because they've got a royalty on the underlying asset, so they're not exposed to cost pressures. They're exposed to price increase. Because there is that lower risk, they trade at higher. They trade at higher multiples. So they're downside protection in some ways. They will not talk as much generally in an upwards moving price environment. At the initial stages, they might, because you'll have a bunch of generalist investors go, oh God, I've got to own gold, so I'm going to go buy Franco. It's big, it's liquid, it's exposed to the gold price, it's performed better than the gold price over the last X number of years. I don't own Franco. They might go in, buy an Altius, which is a diversified royalty company, trades at lower multiples because of this mismatch with investors. Gold companies and royalties are theoretically expected to trade at higher multiples. It's a whole other topic. I am a director of Altius and I do own shares. So these are mechanisms that you can go and be exposed at a lower risk. And then the exciting part of our sector, I mean, at the heart, anyone who's investing in junior minings or junior stocks is a gambler. It's the individual equities, but the problem is there's so much choice. And how do you filter that? I would say about the mining sector, and you'll see a number of junior company CEOs here, unlike many other sectors, the management teams are very, very available. So you can call up and you can speak to them, they will talk to you. So you can develop a relationship, and there's a huge amount of information out there. And so, but it's how do you narrow down that choice? And narrowing down that choice is newsletters such as Exploration Insights, which Brent was a founder of, that I'd say probably one of the best in the business, very, very technically driven. Very trustworthy. Some newsletter writers maybe perhaps less so. It really does depend on their business model. So it's finding people whose opinions that you trust and who that you understand their incentives, I think is maybe the key thing. If the company pays for them to talk about things, possibly they're not the most objective entities. So that would be my.
Well, I appreciate the mention of Exploration Insights. Yeah, I think, really, what's the fun in buying an ETF? There's none there. I do think, though, if you're going to get into the junior sector, it's really worthwhile having someone that knows the industry that you can bounce ideas off, people's names off, that sort of thing, be it a brother who's in the industry or a newsletter writer, if your broker's any good at it. I think that's really helpful if you're new to this sector, and talk to the people that are in the business. You can call them. I think, if I can, I'll make a recommendation here is tomorrow, I think at 9 a.m., Caleb from Headwater Gold is going to be giving a presentation. I think that's one worth seeing because you can see where the upside is, and you can also see where the downside is limited and such, and I own that stock as well. So I would, I come and listen to that. That's a good story to start with.
He did make a good point. Why buy an ETF when you can experience the absolute joy and the absolute hell of owning junior mining stocks? It's an emotional experience.
The thrill is real. Do we have any other questions from the audience?
Thank you. I might be crazy just for asking this question, but do you guys have any experience with, say, liquidations in mining stocks or exploration stocks?
I have owned, I'll put my hand up there, never believe anybody who says they've only ever made money. I owned a stock that into bankruptcy because I didn't sell. Back to this key thesis, which we didn't touch on enough with. In our sector, when you buy, you must, at that point in time, make the decision as to when you sell. We're all very, very good at buying. We're very less good at selling. So that does happen, obviously, in our sector. You don't want to be exposed to it. I think there's very, very, very clear warning signs. We've seen a few. If you're a producing company and you're tapping the market with little financings and things are not materially getting better, exit take the loss. I mean, the other thing psychologically we do is go, oh, I'm down 50%. I'm going to wait till I get back to my entry position. That's insanity, because you could be down a further 90%. So you're more likely to see bankruptcies in a producing company because it's much, much harder to stop spending money. Whereas an exploration company it can huddle down, it doesn't tend to have these big expenditure commitments in front of it.
Okay, sorry, just to follow up, because most of the stuff in the mining sector, I would assume, is probably difficult to like move or sell off to anybody for maybe like material amounts or anything. So, are there any do say producers or refiners have anything usually of value if you're like really?
Oh, you're asking to look to buy stuff?
Yeah,
that there might be
to buy stuff in the liquidation.
Yeah,
that's why I said I was crazy.
Yeah, price dependent, obviously. I mean, there's always value depending on the price, but normally you'll have lots of competition because you'll have the creditors that are looking to monetize those assets so they can actually get something back.
So I think we are out of time. I do want to say, please come visit the resource track that will be being showcased tomorrow with all the company presentations. There's a lot of great stories here, and I encourage you to take a look at the list of companies being presented. Also, I encourage you to speak with Nikki and Brent tonight under the Eiffel Tower. And if you don't get a chance to speak with Nikki and Brent, how can they find you?
Email, phone. I can make them available, or they're going to be on the website, or I'm pretty easy to find. Yeah, I don't hide.
Yeah, for me, it's just go through explorationinsights.com. There's actually a lot of literature there, a lot of reports that Joe Mazumdar has written, who actually writes the letter now, and there's a contact there as well. So happy to get any feedback or answer any questions, and do take a look at the website. There's lots of good free information.
Excellent. Well, thank you, Nikki and Brent. Thank you to the Crafts, and we will see you under the Eiffel Tower.